This is Barry Zalma on insurance, speaking about how to acquire a policy of insurance. The person acquiring insurance may only acquire insurance from an insurer by one of three methods. First, by meeting with an agent of the insurer. The agent is a person appointed by the insurer to transact insurance business with and on behalf of the insurer. The agent usually has the right to bind insurance in the name of the insurer without first obtaining permission from the insurer. The prospective insured presents his or her needs to the agent, who will either accept or reject the proposed insurance. If accepted, the prospective insured is immediately an insured of the insurer. California Insurance Code Section 31, for example, defines insurance agent as a person authorized by and on behalf of an insurer to transact all classes of insurance other than life, disability, or health insurance on behalf of an admitted insurance company. Close quote. Second, a policy can be acquired by dealing with an insurance broker. An insurance broker is a person who transacts insurance with, but not on behalf of, an insurer. The broker's only duty is to the prospective insured, so he or she shops for the broadest coverage available at the lowest possible price. The broker cannot bind an insurer without first obtaining a commitment in writing to insure the prospective insured. California Insurance Code Section 33 defines the term insurance broker as follows, quote, a person who, for compensation and on behalf of another person, transacts insurance other than life, disability, or health with, but not on behalf of, an insurer. Third, insurance can be acquired through what is called a direct writer. These insurers refuse to deal with agents or brokers. They will accept proposals for insurance directly from a prospective insured who will speak, usually by telephone, with an employee of the insurer who has the authority to accept a particular risk. The agent is compensated solely by a commission from the insurer. The broker is usually compensated by a commission from the insurer plus a fee charged to the client policyholder, insurance applicant, or insured. The direct writer, on the other hand, pays a salary to the person who meets, usually by telephone, with a prospective insured, and can accept certain risks directly or with the permission of the insurer's underwriting department. In fact, some direct writers only allow prospective insureds to communicate directly with an underwriter. In simple language, the agent transacts insurance with a prospective insured on behalf of an insurer, while the broker transacts insurance with but not on behalf of an insurer and only represents the prospective insured, and the direct writer only represents the insured for whom that underwriter is employed. In a case called Superior Dispatch versus Insurance Corporation of North America, a 2010 decision of the California Court of Appeal, it concluded that, quote, representations in an insurance application prepared by an insurance broker on behalf of an insured are attributed to the insured as a matter of law. And this case also cited L.A. Sound USA versus St. Paul, a 2007 decision of the California Court of Appeal. Insureds are, therefore, accountable for all statements made on their behalf by brokers who are their agents, as opposed to agents of the insurers. When a broker prepares an application for insurance, therefore, it is imperative for the prospective insured to carefully review the application to verify the accuracy of the statements made in it. Otherwise, insureds face the possibility that insurers may attempt to void coverage if there is a misrepresentation or concealment of a material fact made by the broker. On the other hand, information known to an agent, even if not transmitted to the insurer, is considered to be known to the insurer, and therefore agents have an opportunity to bite the hand that feeds them. Now, to get insurance, one must go through the underwriter. The underwriter is the person who makes the decision to insure or not insure a prospective insured. In modern practice, that person is called the underwriter. In the old days at Lloyd's in the coffee shop 300 years ago, insurance policies were written on a blackboard in chalk, and those who took the risks would write a percentage of the risk they were taking at the bottom of the proposed insurance policy and sign their name at the bottom. And that's why they were called underwriters, because their name was under the policy wording. Unlike the original underwriters at Lloyd's, who invested his or her own money in the policy of insurance, the person with the title underwriter in modern American insurance is usually an employee of the insurer who was employed to evaluate risks the insurer-employer is willing to take. The agent or broker deals directly with the insurer's underwriter, or an agent appointed by the insurer to act as its underwriter. The agent and broker try to present the risk to the insurer and underwriter best suited for the risk that their client is asking to be insured. The underwriter is the risk taker. At Lloyd's, the underwriter risks his or her own funds. In modern insurance company practice and in modern practice at Lloyd's, the underwriter is the person who risks the funds of the insurer for whom he or she works. The underwriter decides whether the risk presented by the broker or agent is the type of risk that the insurer is willing to take. Each insurer has specialized underwriters who look at risk differently and different risks, and use their own criteria to evaluate them. Part of the evaluation process that is used by an underwriter includes the use of a loss prevention engineer. If the risk the prospective insured proposes is large, he or she will often be visited by a loss prevention engineer. This person, employed by the insurer, either as an employee or an independent contractor, is obligated to inspect the prospective insured's real and personal property and interview him or her to ascertain that the insured and the property meet the requirements the insurer insists upon before it will accept a risk for insurance. Often the risk inspection takes place after the insurance is agreed, but within 60 days of inception, so if the risk does not qualify, the policy can be effectively canceled. Rather than using a loss prevention engineer, some underwriters will just use what is called a pre-risk inspection service. If the risk is residential or a specialty type of business, the insurer will have it inspected by a specialized company called a pre-risk inspection service. Its inspectors are often experienced claims adjusters who understand the types of hazards faced by prospective insureds and their prospective insurers. The pre-risk inspection service seeks much of the same information for the insurer as the loss prevention engineer. In addition, it determines if there is any specialized information needed by the insurer because of the type of risk. The pre-risk inspection service will conduct a different inspection for a residence in a middle-class neighborhood than one in a wealthy neighborhood where the dwelling is filled with fine arts and antiques. Likewise, inspection of a convenience store will differ from the inspection of an antique store or a jewelry store. Each has its own specialty and its own special needs. The pre-risk inspection service is versatile and entails much more active participation from the prospective insured than do the activities of the loss prevention engineer. After it completes its inspection, and with the loss prevention engineer, it recommends changes to the insurer. The insured will usually be required to make these changes as a condition of coverage before insurance takes effect. So as you can see, obtaining a policy of insurance is a team effort, a place where a prospective insured meets with an agent or broker or speaks to a direct writer to tell them what needs to be insured, what risks of loss the prospective insured wishes to protect against, what types of coverage the insured needs, and then they work together to find a way to provide the insurance required as long as the risk that is being presented by the prospective policyholder is one that an insurer is willing to take for a premium the prospective insured is willing to pay. This video was adapted from my book, Zelma on Insurance Claims, which is from volume part 101 of a 10-part treatise on insurance claims, available as both a Kindle book and a paperback, as well as some hardcovers from Amazon.com. Zelma on Insurance Claims, a 10-volume treatise, was written by me and is now in its third edition, with all 10 volumes updated and rewritten to be easier to read, available from Amazon.com. If you found this video to be interesting or useful to you or your colleagues, please pass it on. It's free. And please also subscribe to my YouTube channel, my Rumble channel, and click on the like and the Rumble buttons as you do. And subscribe to my blog, to my Rumble channel, to my Substack publications, and to my locals community. Thank you for your attention.